Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's get straight to the top story this evening. A day after the Prime Minister defended his government's handling of the economy, some of the top leaders of India Inc. have reposed their faith in the India growth story. CNBC TV18 has exclusive access to the biggest economic summit in India hosted by the World Economic Forum. From Bharti Airtel Sunil Mittal to Adi Godrej to Mastercard's Ajay Banga, the overwhelming sentiment is this: the current slowdown could just be a short-term blip and the fundamentals of the economy remain strong, with growth potential still intact.
Well, I always say 6 to 7% growth in any place in the world would be a cause for a great deal of jealousy, and I think India should be happy. So I think we are very fortunate as a nation that is still growing at a good momentum. Yes, we would like to be at 8, 9%, but let's not lose hope just because we have had a bit of a dip.
So speaking of impetus to growth, the RBI is maintaining a status quo position. The commentary is that even for the coming quarters, that's the position they'll maintain. Just your sense, sir.
I think it was expected that the rates are not going to go down in a hurry. And everybody will push RBI, and eventually they'll have to balance out inflation, economic growth, and the needs of the industry. So I'm hopeful.
At the IMC, you mentioned that the industry is undertaking a massive investment. 50,000-60,000 crores is the figure you cited. Yeah. Will that be enough, sir, for meeting the 2020 target for 5G?
Yeah, 2020, 5G is just a new technological box which has to go.
Sure,
so that's not the...
But sir, TARS, fiber, will that be enough?
Yeah, a lot of work is going on.
The problem was that the GDP growth rate was a low 5.7% in the April-June quarter. In my view, most of it was due to low GDP growth in the month of June. June was the month before the introduction of the GST on the 1st of July. And because many of the GST rates on manufactured products were lower than the earlier cumulative tax rates, there was destocking. So most of the clearance took place after July 1st. Okay. I expect the GDP growth rate will catch up in the July-September quarter, and it will be very good in the second half of the year.
I think you have to take this debate beyond a quarter here or there, and you've got to look at where India has come from. In the last decade and two, India's GDP has multiplied 10 times. Its foreign exchange reserves have multiplied 50 times. And FDI is at the highest for any country in the world. I think that's getting lost in a quarter here or a quarter there. And I would not allow that to be the end result of all that's going on.
So half glass full.
Yeah, in fact, that's my point, that I would be optimistic about where the Indian economy is going. The Indian economy has so many factors working for it. Yes, there are structural things that need to change. Those are the kind of things that the Prime Minister was talking about. The kind of reforms he's pushed through in 3 years are more than happened in the prior some years. Now, to be clear, reforms started with the prior government. This is not a political situation. I think India and its citizenry and its polity is ready for reform and is pushing reform and is actually picking up the pace of reform over the last few years. Reform, by the nature of the word, will be disruptive. It will be challenging. Having the patience and the perseverance to pursue reform for the right reasons is what I think the Prime Minister is trying to push for.
I'm greatly heartened by the recent announcement that the Prime Minister has made, which is he is aware of the economic situation and he is going to do something on growth over there. And that is something that companies like ours depend on hugely, is to see whether government spending can increase, what is it that can be done to bring back demand into the system. Having said that, it need not only be CapEx. There could be a lot of OpEx. And with our digital offerings, we are now trying to bring solutions to our customers which will help make them much more competitive, even in an environment which is difficult at the moment.
With the passage of time, there will be a settling into GST that will be better. So if I look at it from that perspective, certainly the next this quarter, which has started last quarter and first quarter, I should see signs of progressive improvement that will happen as far as the overall industry itself is concerned.
I think, if the economy is reasonable, inflation is under control, and we don't have any macro financial issues, I think one should be optimistic that there would be rate cuts to give a further spurt to the growth of the economy. There is a general consensus that it will be somewhere closer to 7%, whether it's a little less than 7 or a little more than 7. It's a matter of how the next few months and how this festival season generates demand and consumption in all sectors. But I think overall the numbers are looking good.
See, the government has been very keen that the macroeconomic stability should not be disturbed. That's why the fiscal deficit targets have been adhered to. Despite the temptations, government has not taken the easy path of trying to relax the fiscal deficit target. Our current account deficit is within much lower than what it has been in the many previous years. You know, you look at the inflation rates are very reasonable, much within the limit that RBI has set for itself. So the macro, you look at the foreign exchange reserves and so on and so forth. I think we are doing extremely well because we are aware that while we try to grow our economy, we must have our macroeconomic situation in place. So I don't think any compromise is being done there as well. We are not trying to get short-term fixes here. We are looking at medium and long-term.
Now, while there is optimism on recovery, the main concern is the short-term blip due to GST. Many CEOs claim that there are still teething troubles and operational issues that continue to dog the landmark tax reform. In fact, some CEOs even said that their supply chain have been disrupted altogether. On the other hand, they are also hopeful that these niggles are only transitory and GST has the potential to lift economic growth.
Rates, it's a structure. There is a rate, it's defined, it subsumes a lot of taxes that you otherwise were paying. There's a single rate of tax. So I think, you know, from a efficiency point of view and from an implementation point of view, it is very good. Now, GST is a complex process in terms of getting it going because, you know, you have to file the returns, you have to get your refunds, you have to get all these things going. So I think rather than the rates, is the IT process behind it or the system process behind it that really needs attention.
So on the GST, there's been a mixed bag. Initially, there was a slowdown. I think a lot of our supply chain is still struggling because of either unpreparedness themselves or part of the other issues that are linked to it. So there is a slowdown as a result of the GST. In some areas, it has begun to pick up again. Overall, I think this is a short-term adjustment that will take place, and I expect it to pick up over a period of time. It is not as slow as it was when the GST was first introduced.
So I must say that since the early part of July, when we had initially some settling in issues, August was certainly better, and September also has been reasonably good as far as settling into the GST regime is concerned. There are still a few operational issues that are being ironed out. I think by and large, it has been a fairly encouraging exercise and settling in as far as Nestle is concerned.
People in digital world are the cross-border world. For us, India remains one in our digital world. For us, a person in Uttar Pradesh equal to the person in Delhi, equal to a person in Gurgaon, which is Haryana. So we, as a digital world, have the most to gain on GST, if you ask me, because of the border crossing, that digital crossing that has been done. It did get costly implementation in time, effort, but at the same time, that reward is coming there. Now, at least for our platforms, it's been one platform, so it's good. I mean, people like us are the champions of GST.
Okay, and here's another exclusive. A shift towards a digital economy is natural. That's the word coming in from Railway Minister Piyush Goyal. An exclusive interview with CNBC TV18 Shireen Bhan. The minister also added that the government will not forcefully lead people to go digital. He also talked about the key lessons from the demonetization exercise. Here's an excerpt.
The country over a period of time had become too used to cash. I think the good big thing that happened was the country is now seriously moving gradually to a digital economy. In terms of other learnings, I think traceability of cash, so just allowing banks to give any amount of cash to any and everybody who wants to withdraw it, may not always necessarily be good. It also causes economy moving from a formal economy to an informal economy. So I think some amount of check and balance on where the money is going, what's happening with large amounts of currency is good. The Prime Minister yesterday spoke about how the cash to GDP ratio has improved from 12 to 9 in a growing economy, which means the currency has significantly reduced in the system.
When Kenneth Rogoff was here in July and we spoke with him about demonetization and the lessons from demonetization, he was very clear that he doesn't believe in going cashless, but what he did seem to suggest is that you should have regulation to bring down the use of cash. Now, we've seen several recommendations, whether it's the SIT saying that there should be a cap on withdrawals and so on and so forth. From an idea or a vision as far as regulating the use of cash is concerned,
we have no plans to really focus on regulation as much as on persuasion. And my own sense is that is what works well with the people and will give us faster and better results. I don't think we need to regulate that. I think what we need to do is only incentivize, like we did with the income tax for digital transactions, B2B. Going forward, the government is looking at different ways to encourage people to transact digitally.
So, Mr. Goyal, you said that more regulation is clearly not on the government's agenda at this point in time. You would like to use persuasion to get people to move to digital transactions. Let me also then ask you about what the future...
It was stupid if anybody didn't understand the basic logic.
We understood the logic of that then, but I'm saying now, what is the thinking as far as high denomination notes are concerned?
I don't know. That's something which is well beyond my pay grade. But I'm sure not too many people here are...
Let me ask you for your point of view personally, sir.
I don't think many people here are carrying too many high denomination notes these days. That's passé. We all use digital means to transact.
Flashes on your screen in just a bit, but let's quickly take a look of how markets reacted today. After 4 days of positive finish, markets failed to conquer new heights at witnessed selling pressure in the last hour. The Nifty opened higher but failed to capitalize on early gains. That index fell sharply in last hour to end about 13 points below the crucial 9,900 level. The Sensex closed about 0.25% in the red among the broader markets. The Bank Nifty mirrored benchmark indices with loss of 0.25%. The mid-caps outperformed today. That index gained about 0.5% in sideways day of trade. Anuj Singhal is here with a wrap of the market action. Anuj. Okay, we'll get Anuj later. We have some important lines on your screen. The Uday Kotak-led committee has submitted the report on corporate governance to SEBI. It's a 177-page report. Remember, a panel had been set up to give recommendations with respect to corporate governance, and that report has been submitted. They had sought some time. It's been about 3 to 4 weeks of a delay there, but that report has formally been submitted. We'll just get you the details of that. But Prashant, this is something that the corporate world had been waiting for. After Tata, after Infosys, this is something that was much needed. What would be the salient features that we need to watch for?
You know, so the report is on the website, Kritika. I mean, it's on the SEBI website, and I think they're inviting public comments on the report, and I think they usually give a month or so for public comments discussion before they actually firm up rules. The regulator firms up rules based on the report, what has been recommended. So, I mean, this largely is expected to you know, code a lot of the stuff which a lot of corporates have been doing, but which I think everybody should be doing. I mean, I think that's the way to put it. For example, one of the contentious issues was, you know, the role of the appointment of independent directors, for example. What is the criterion for appointment of independent directors? You know, what should their role be? Because, I mean, that has come under a fair bit of scrutiny because of the two cases that you outlined. One is, of course, what happened with Infosys, and before that, what happened with the Tata saga. So, should there be a minimum criterion as far as, I mean, some set criterion for appointment of independent directors? I mean, the report was expected to look at that. Right now, for example, you know, the rules mandate that there should be one woman on the board. But I think what was talked about, you know, the chatter was that the report essentially will look at mandating that one independent director should be, you know, essentially a woman. So, I mean, these are some of the changes. Then, of course, I mean, proposal of important, passage of important
So one of the things, Prashant, that is flashing right now is that at least 6 directors need to be on the board of a listed entity. So as far as the board composition is concerned, one of the features is that at least 6 directors have to be on the board of a listed entity. Typically that is the case, but many companies have had 4 directors, 5 directors. So 6 is the minimum limit in terms of how many directors can be on the board. So that's one point as far as the board composition is concerned. I would reckon that there would be other areas in terms of independent directors, in terms of women representation that will also come in. We're still getting all the names. But remember, this panel has players like Uday Kotak, Cyril Shroff, KK Mistry, JN Gupta, Rishad Premji. We have HP Ranina in. Mr. Ranina, how significant would this be? We are still getting some of the crucial points, but one point that we have gotten is that at least 6 directors need to be on the board. Okay, another point is flashing right now. Time right to split chairman, MD, CEO role of listed companies. Okay, so essentially what they're saying is that it is the right time to split up the roles of chairman, MD and CEO. Mr. Ranina, come in on the points that you're picking up so far.
I think it's a very good recommendation because today what happens in practice is that the chairman and the CEO and the MD generally belong to the promoter group and they control the company. They don't allow independent directors to function. They don't give adequate information to directors. Even accounts are sent only 1 or 2 days in advance to the audit committee. So all these are things which need to be plugged. You see, you have to bifurcate the function of a chairman and there should be a separate function of a chief executive who needs to be a professional man and not from the promoter group. And the independent directors, I think one of the recommendations may well be that independent directors should be accountable directly to SEBI and not to the promoter group. So that's one important point which I am waiting to see in the report.
A point that has come out is that right now, I think we are flashing the points as far as the board of director compositions are concerned. Another point that has come out is that the board of directors must be mandated and inform of regulatory and compliance changes at least once a year. I would reckon that already perhaps happens, but to ensure that there isn't any wrongdoing, they have put this as a mandatory requirement.
Yeah, many of the professional managed companies with which I'm associated, they always have one extra meeting only to consider corporate governance issues and other business-related issues. Because what happens generally is that a quarterly meeting mainly deals with the quarterly results, and the other main issues get left out of the picture. So that is why they have rightly suggested that there should be an extra meeting where only one issue should be considered, and that is issues of corporate governance and statutory compliances.
Okay, succession planning is another point that they put out. Succession planning, risk management must be addressed to the board at least once a year and must be discussed within the board. So that's another point that's coming in.
I think it's a very good recommendation. I think it should be made mandatory not only for listed companies but also smaller companies which turnover is more than 100 crores.
Prashant, come in on the points, as far as the succession planning, risk management to be updated at least once a year, regulatory compliance, any kind of compliance changes need to be addressed once a year. Essentially, it seems like the board of directors, the strength that it has, the kind of competency it needs to have and the control it has is being recommended to be strengthened.
Oh, absolutely. I think, we're still getting this information piecemeal. I don't think it's, as is being pointed out, it's a large document and we'll have some of the most important highlights maybe together, and maybe we'll be able to focus and zoom in on those with some more focus. But I think we are starting to get some of it. Right time to split chairman, managing director, CEO. I think we just discussed that. This is essentially the split, Mr. Ranina. I mean, there should be 2 separate people the chairman and the MD cannot be the same person, or the way you interpreted it can't be the same group. I mean, is it the former or the latter?
Yeah. Well, currently they are talking about the 2 different persons.
Okay.
But I think to make it more effective and meaningful, they need to have...
okay, there's a clarity here. Companies with 40% public share must split the head and the CEO role. What does this mean?
It means that there must be 2 different independent people. Yes.
But head meaning, head could be chairman, could be the MD as well?
Yeah, of course. But the chairman could be a non-executive chairman, and the MD could be the whole-time CEO of the company. Now, in all public sector banks, they've already done this. As you are aware, in Bank of India and other, but the CEO is separate from the chairman. So they have already started this process in the banking sector. And I think the UDI committee report is in the right direction, and it should be implemented as early as possible.
What would be the large purpose of this? What would be the purpose of the 40% public shares? If you have, then you have to split those two roles. What do you think is the purpose that the panel has in mind?
The purpose is to protect the interests of smaller shareholders and to make sure that the company is managed on professional lines. And that is the whole objective of this recommendation. But I think in course of time, government will consider even widening the scope of corporate governance practices and making it mandatory even for those which are not listed on the stock exchange, because there are many issues involved when your company is not listed on a stock exchange. So I think it is a good process. The right signals have been sent. And I think the corporate governance now will be taken seriously by the top companies.
Okay, there is another line which is coming in. If a director doesn't attend at least half the board meets held over 2 financial years, his continuation must be ratified by shareholders. So attendance also, I mean, there are some minimum requirements which are being placed on how many board meets a year director must actually attend to maintain
Okay, Prashant, we have KK Mistry joining in. Mr. Mistry, we are just getting some of the recommendations that are gradually coming in. Can you take us through the salient features of the recommendations that have been submitted to SEBI, sir?
Long thing to get into right now. But what I can say is that the spirit behind the setting up of the committee was to try and further enhance the level of governance in the country. And I think that's what the members of the committee have tried to do. We've had several rounds of meetings. Some of these meetings have been whole-day meetings. And the report is now there for public comment.
Right, Mr. Mistry. So you did, thanks for at least taking out 2 minutes. So those were the salient features. But what is the path going forward for this particular committee's report? And how will it change corporate governance in corporate India?
So what this report will be done is that my understanding is that SEBI will be putting it up for public comment. Once the public comments are in place, SEBI will review these comments. If necessary, then if there is need for further intervention of the committee, then that will be sought. If not, then SEBI will probably decide what to do, in the sense that they'll probably take some of the recommendations which they like to the board, and then it becomes a regulation.
Mr. Mistry, one of the recommendation was that the board should have at least 6 directors. What is the rule right now?
Look, all these things you should talk to a lawyer and he'll give you a better sense.
Okay, I think we will have to wait to, do that. But you know, as you said, these are invited. The report invites public comments, and we're also understanding that the changes are proposed to be implemented with the area which requires most attention. I'm sure it would have found mention in the report, but to your mind, which is the area which requires most attention?
Broad and encompassing. There are things on how to conduct or how meetings are to be conducted, attendance of directors in board meetings, minimum attendance, age limits for directorships, and so on and so forth. There are many provisions. So I think rather than commenting in an ad hoc manner, you have a look at the report and then you can talk about it.
So, Mr. Mistry, just final question from me. Of course, a lot of details have come out. They'll be digested, formulated, everything. But just one thing, what is it that board really deliberated on the most, and what has been the topmost agenda for the board in this particular, reform?
It's very simple. The agenda was how to enhance governance levels in Indian companies, and that really, truly was the agenda. Now, the terms of reference of the committee are in public domain.
Yeah.
So under each term of reference, there is a chapter which has been devoted, and that chapter deals with, the various details with regard to that particular point.
Okay. Mr. Mistry, thank you very much for that. Guys, I have the report. I mean, the PDF file, as Mr. Mistry was pointing out, we need to go through the report. It's a big report. But I'll just quickly read, on the first page, it essentially lays out what the report is going to cover, and then we can get into the details. The terms of reference of the committee were to make recommendations to SEBI on the following issue: ensuring independence in spirit of independent directors and their active participation in the functioning of the company, that is independent directors. Second, improving safeguards and disclosures pertaining to related party transactions. Third, issues on accounting and auditing practices by listed companies. Fourth, improving effectiveness of board evaluation practices. Fifth, addressing issues faced by investors on voting and participation in general meetings. Sixth, disclosure and transparency related issues. And the last, any other matter as the committee deemed fit pertaining to corporate governance in India. So, I mean, I think we get a gist of what this report is going to be. I mean, this is just, in a way, touching upon the subjects which would have been covered in this report. But feel free to come in while I go through this report.
Mr. Ranina, you want to come in on the points that Mr. Keki Mistry also mentioned and the salient features that the report is addressing, as pointed out. And let me just introduce Suhas Tuljapurkar on the show as well. Mr. Ranina, quick answer for you, and then we'll go to Suhas.
Well, the terms of reference were known in the past, and they were quite widely worded. So I think the committee has done a lot of good work, diligent work in making sure that all those objectives are achieved. And the whole object, as Mr. Keki Mistry rightly pointed out, was to improve the governance standards, which I think will be now implemented. But the main issue is, people must change their mindsets. And the top promoters of companies must accept them in letter and spirit. Only then will these corporate governance issues really be sorted out.
Let's come in on the point of the composition of board of directors. A lot of points that have been mentioned. For instance, for companies that have public shareholding of 40%, they need to ensure that the chairperson of the board is a non-executive director. The minimum directors on a listed companies must be 6. So the entire composition and the control of board of directors seems to be one of the salient focus. Come in on that point.
Very important because if you do that, then alone you can ensure corporate governance standards being protected. Because today what happens is that the independent directors...
so has maximum number has also been given? Minimum and maximum number.
6.
Maximum has also been given 8. Apparently maximum number is about 8 number for listed companies, that is.
Fine. So that's good because it means that they will play a predominant role. And if they play a predominant role, they will also be involved in the audit committee. They'll be on the nomination and remuneration committee. All these are very important aspects of corporate governance. So I think it's a very good thing, and people must now accept this report. Government should not deter. SEBI and government, both Ministry of Corporate Affairs, should make it mandatory as soon as possible.
Suhas, your comments on the changes or the recommendation on the board of director composition, specifically 6 directors, minimum 8 directors, maximum, and a couple of other points that are coming in.
Yeah, what we believe is that India is at an inflection point currently in so far as corporate governance related issues are concerned, and from that perspective, I think it's important to look at this report not merely from the kind of 2 or 4 incidences of failure of corporate governance. What is the sustainability that will be brought out through the recommendations? If the recommendations, they're now open for public scrutiny till about 4th of November. But having said that, you see, one of the salient features there is going to be a recognition of the fact that today's boards of directors or today's boards of the companies are not coming up to what they are supposed to do. In a sense, the board of directors have failed, and there is a recognition today that there is a failure of board of directors, and therefore there is a failure of corporate governance norms being adopted by various companies. So we are at a very inflection point today in the corporate governance space. We can actually look at this report and go up the ladder, or we can trash it and go down. But as Mr. Ranina said just now, that it all depends on how the companies behave and take it to themselves.
So, do you think there would be any significant disapproval in terms of the mandating, splitting the role, for instance, maximum, minimum directorship given in terms of the kind of shareholding? Would there be issues that companies would now put forth once the consultation starts?
No, there would be lots of issues. I mean, if you look at it, bifurcation of a role of a chairman and a managing director, or a chairman, CMD cannot be a boss, but the chairman needs to be independent of the managing director, etc. would pose some problems for some of the companies, but it's very critical. And one of the critical aspects, I guess, would be how the board evaluations take place. From that perspective, I think on the corporate governance perspective, a periodic evaluation of the role of each and every member of the board is something which will assume a critical importance. It's not merely about composition of the board, but it's mainly about the individual directors playing a role and their evaluations being very critically and transparently being available to the stakeholders and shareholders.
You know, another point that has been recommended, gentlemen, is also companies must make any information that has been released to FIIs, FPIs or DIIs public and must disclose it to exchanges. In terms of disclosure norms also, that is just gradually flashing on your screens. Comment on this point, Mr. Ranina, would companies have an issue with declaring this, any kind of information that is given to FIIs or DIIs on a regular basis to exchanges?
Well, some companies on their own have been doing it. Some very well professional managed companies, though not required by law, in the matter of public interest, they are making public. So now they have made it mandatory. If they make it mandatory, then every company will fall in line. And the shareholders, the equity, the investors will all know exactly what is happening in the company. So I think it's a very good recommendation.
Prashant, any other details that we have?
I was just going through. I've reached till point number 5. Basically, I think you discussed a couple of them. The first is minimum number of directors on the board. Right now, there is no specific provision. What is proposed is minimum of 6 directors. Second point is gender diversity. Current, at least one woman director needs to be on the board. The proposal is at least one woman should be appointed as the independent director. Point number 3, attendance of directors. Right now, there is no specific provision. What is being proposed is that directors must at least attend half of the meetings over a 2-year rolling period. And point number 4, which is disclosure of expertise / skills of directors. Right now, there is no provision, but the proposal says that the company must, in its annual report, have a matrix setting out the skills and expertise and competence of the board and how they're being appointed. But I've only, as I said, I've only reached till
it's a 177-page
pages.
So there's a lot to be discussed. We haven't taken a break for a while. Mr. Ranina and Suhas, thank you so much for taking us through the initial phases. We are still going into the details, and I reckon that there would be more to discuss and debate. So we would request you to come in and join in at a later date as well. For now, Prashant, Nisha, Mr. Ranina and Suhas, thank you so much for joining in. It's a wrap on this show, Markets Today. Talk Back will take all the action forward on the other side.